Well, at least on the bottom line, it looks slightly higher than what the street was anticipating. The company has delivered a net profit of 471 crore. So that is a bit of a decline on a quarter-on-quarter basis. But compared to our expectation of 425 crore, it is a beat. So at least on the bottom line, the numbers looking good. On the EBITDA front also, it looks higher than what the street was anticipating. The company has delivered an EBITDA of 7,905 crore. So that would imply, margins. I'm just trying to calculate the margins. In the meanwhile, let me run you through what the revenue number is. 21,934 crore. That is a decline of 6% seen. So here are the consolidated numbers. Consolidated revenues are down 6%, lower than what the street was anticipating. The company has delivered margins of close to about 36%. So that seems slightly higher than what the street was anticipating. We were expecting a big decline in the company's margins on account of weakness in their India business, but that doesn't seem to have played out, at least for now. So margins have come in better than what the street was anticipating, and that has driven a beat on the bottom line. So yes, the profits have fallen by 6.5%, but compared to what the street was earlier anticipating, this number is looking better. So as of now, we only have the consolidated numbers with us. We are awaiting the India performance as well as the Africa performance. Remember, India this time, there was an impact of Jio. This Jan to March would have been the second consecutive quarter of Jio's free offering, and that would have dented the company's voice as well as the data performance. So as a result of which, the India performance was expected to have been fairly weak. But that said, going by the consolidated numbers, it appears to be a beat on the margins as well as on the profitability. These are the only numbers that we have. As you can see on your screen, the margins have come in higher than expectations by close to about 150 crore. Some more statements that are coming through. The mobile data traffic has come in at 271 billion minutes. The India revenues have come down by 7%, but this, of course, is on a year-on-year basis. We are awaiting the numbers on a quarter-on-quarter basis. So very little to go by right now, Kritika. We just have the consolidated numbers where the margins and profits have come in higher, even as the revenues continue to slide lower with a revenue decline of about 6% on a quarter-on-quarter basis.
On a year-on-year basis, if you look at the Africa revenues, they're up just by about 2.6%. So again, can't do the math till we get the exact quarterly numbers, but I would reckon that Africa has still been fairly flattish if you look at it on. But again, I think last year Africa was struggling, so it was only last 2 to 3 years where we've seen some kind of performance in the Africa revenue business. So perhaps, okay, we have a statement coming in. This is a very interesting statement. We have a statement from the MD and CEO who says that the sustained predatory pricing by the new operator has led to a decline in revenue growth for the second quarter in a row. He also goes on to add that the deteriorating health of the industry was compounded by the tsunami of incoming voice traffic from the new operator, as a result of which significant investments had to be made just to carry the incoming traffic on our network. The net result of which was a revenue decline, as Rima was pointing out, of 7.1% in Q4, even as EBITDA margins eroded by 2.9%. FY 16-17 saw a muted top-line growth of 3.6% versus the double-digit growth witnessed in preceding years. Yes, they do kind of give a larger overarching statement on their commitment in the way forward. Our long-term commitment to provide the best experience to our customer continues to drive all our actions in every single aspect of the business. So it is perhaps, it was expected that Real Jio and the kind of competition and pricing that has been factored in will be affecting Bharti Airtel numbers, but yes, this is a very important statement coming in. We have Prakash Diwan through. Yes, Mr. Diwan, what do you make of the numbers? On the top line, I would say it seems like a disappointment.
Yeah, but I really don't think there was too much of expectations to the contrary, for the simple reason that this was one of the toughest periods, and if you see them on a YOY basis, the numbers definitely will also look worse than what they look on a Q1Q basis, because today the situation is very different from what it used to be exactly 12 months back for Bharti. So I think if you ask me, the EBITDA margin and whatever they manage in terms of absolute EBITDA as well doesn't seem to be so bad, but yes, there is a degrowth that very clearly there's a slowdown in customer activity and acquisition, both which would be disappointing. But I don't think the street is going to be so disappointed after seeing these numbers.
Okay, I have some breakup, but I think this is the full year performance. Rima, do you have the India and Africa number for this quarter? I can see a point where Africa top line grew by 4.4% on a constant currency basis, but again,
that I guess would be again on a year-on-year basis.
Exactly.
But I can also see, you know, from the statements the company has given out, while the revenues have come in at 21,935, the EBITDA they're putting out is 7,993. So if we go by that EBITDA, we're getting margins of 36.4%, and that would be pretty healthy because that would imply that, you know, margins have actually hardly fallen by about 30 basis points, and the profit figure that they're giving is 373 crore, which is lower than what the street was anticipating. So I'll just, you know, I'm waiting for the entire fact sheet to come out. But, you know, we were talking about the predatory pricing of, you know, the industry has seen just 6 months ago. If you were a Bharti customer and you you took a 345 monthly pack, you would have got data of only 1 GB 6 months ago. For the same 345 now monthly plan, you can get data of 28 GB.
Yeah.
So that is the extent of pricing pressure which is going to start reflecting in the companies.
But, you know, I reckon that will continue for a while. I think we still have Prakash with us. Prakash, would you expect that to place some kind of pressure on the numbers going ahead? I mean, when you are analyzing the numbers in the next few quarters, you will have to take that into account, and that will reflect thereby on the margins and the ARPUs and the RPMs as well.
Sure. So, you know, you have to see in the context that Rima pointed out, that what's happening is customer behavior is also changing very rapidly with the liberal usage of data going up. So people are still probably paying the same, but getting or consuming much more data. Now, if that were to happen, it's an element of how fixed costs get divided, okay, or get amortized or utilized. So it's more to do with your utilization levels of already the infrastructure that you have built in. And from that perspective, Bharti is not on a bad footing. So that's one of the reasons why they've managed to keep margins intact. And it's not kind of, you know, bled them the way predatory pricing from Jio was expected. So Jio has just set a benchmark for higher usage at the cost. Whereas it's not that people have started reducing their bill values or quantums and saying, okay, I'll continue using the same data that I was doing, but pay lesser for it. No, they're paying the same amount, but using more data. So there's a difference there. And I think that's what Bharti is kind of taking advantage of or got saved because of. And I think the next couple of quarters might just see that ebbing instead of that becoming much more intense, if you ask me.
How would you expect the stock to react tomorrow, Prakash?
So I don't think these numbers really are a howler of sorts. It's definitely the profit number is disappointing. I don't think the stock is going to negatively react. It might not have the steam to do some huge run-up or something, but it's not going to be punished as much as we thought till today.
Okay, we have some breakup there, Prakash. India volumes are at up by 15.5%. If I saw that correctly, I think yeah, it was up by 15%, and 158 or 159 was the
ARPU. That is
ARPU.
the average revenue per. The average revenue per user has indeed, you know, come in at 158. So that would have declined by close to about 8%. While, but on account of this decline in ARPU and the pricing pressure, volume growth has been quite robust. But so broadly, these are the numbers that are coming through on, you know, on Bharti Airtel. We'll of course keep getting you more analysis. We'll slip into a break. Okay.